Hi ladies and gents, welcome to screencast 1 of 2 on bank reconciliations. I've decided to split it into 2 because students sometimes get confused and mix the 2 parts of doing this together, and it's really important that you do one part and do it correctly and then you actually do the reconciliation. So the first part we're going to focus on today is updating the cash book. Okay, first thing to do here, we've got an example of a cash book. Obviously, you're all used to it. When we receive money, we're putting a debit entry because that's money coming into the bank. And when we lose money, we put in a credit entry, and we do that because that's money leaving the bank. What you will notice when we look over here is it works the other way around on a bank statement. The reason for that is the bank do a bank statement from the bank's accounting point of view. So when we pay money into a bank, okay, so in this case we paid cash of 1,050 into the bank, it's a debit in the cash book, but from the bank's point of view, it's now a liability. So in their accounts, it will be a credit entry. So it's really important that what you remember is everything that goes on the debit side of a cash book, we would expect to see on the credit side of a bank statement, and everything that you see on the credit side of the cash book, you'd expect to see on the debit side of the bank statement. Once you've got that and remember it, it is relatively easy. Right, so the other problem that we've got is that our cash book and our bank statement won't necessarily tie in terms of dates. And the reason why they won't tie in terms of dates, imagine you send a check by post to one of your suppliers. You'll enter it in the cash book on the date that you've actually sent the check out. However, what's got to happen is that check has got to reach nor the supplier has then got to go to his bank, put it into the bank, and then in the bank they've got to process it and claim the money out of your bank account. And that can take some time because obviously there are lots of different banks and therefore the money doesn't transfer automatically. So if we have a look, that was quite a good example. On the 9th of September, we actually sent the check out, but we didn't actually lose the money in our account until the 12th of September. So you've got that delay. Right, what we're going to focus on today is things that are in the bank statement but aren't in the cash book. If you remember back to your source documents, for certain transactions, the bank statement is a source document. So it's a source document for standing orders, direct debits, bank interest received and paid, and it's also a source document for any credit transfers and any bank charges. It's the first time you will know how much direct debit you've actually paid for fuel, for example, when you receive the bank statement. Although nowadays with online banking, you can always look at your bank account and see what's gone out and what's come in on a daily basis. So what we need to do, these transactions have happened. Our cash book initially is what we're looking at being wrong, and we need to update the cash book. So remembering the first one the first thing we're going to do, we're going to actually tick off all the items which appear in both the cash book and the bank statement. So that 1,050, we'd expect it to be on the credit side of the bank statement. It's a debit entry, so we can tick that through, that occurred. We've got the 350 to Lulwa that Lulwa gave us, that's appeared. It's a credit, so that's increased the amount of money we can take out of the bank. But what we've got here, we've got 2 more transactions, and they haven't yet appeared in the bank statement. So they're quite late in the month. It's probable they've gone in the post and haven't yet been cashed in. We've also got transactions on the credit side, so these are our payments. So the ACMA payment, yep, happy with that. That occurs in both. But the NOR, we already know that appears in both because we've already discussed it. But Jitan and Roberts' there's been a delay. So because these are people we're sending money to, that's stuff we have sent in the post. So it's either that they haven't yet shown the checks to their banks, or it's taking time for the two banks to talk together and for funds to be transferred. Right, this part, the updating the cash book, what we need to do is take these transactions for which the bank statements are source documents, and we need to enter them into the cash book and update it. So we can see here that what's happened is the cash book was balanced off, and we thought that we had a balance carry forward of 1,500. So that means we thought we had $1,500 in the bank. However, what we do now know is we've got a credit entry here for bank interest, and because it's a credit entry, we need to debit the cash book. So that means we've actually received some interest. So that's going to be interest received of $15. So now that's going to appear in both. So that's okay. We can tick that one off. And then we've got two payments, and we know the payments because we're in the debit side of the bank statement, and therefore we've got to put them into the credit side of the cash book. And what we'd also do at the moment is we would also put in a debit entry in the fuel account, and then we need to put the standing order to TED in. So that's 400. Right, what we're in the point to do now is to rebalance off our cash book and to balance it off correctly on the 1st of October. So the bigger side is going to be the debit side at the moment. So make both sides 15,115. And then what we need to do after that, work out the balance carry forward, which is 840 on the credit side, and therefore the balance brought forward is an asset of $840. Okay, what I've done, what you'd expect me to do, is I've also gone and come up with a couple of questions that you can have a go at. So you've got a cash book that's been drawn up, you've got two cash books that have been drawn up, and what you then need to do is to work out which transactions appear in both, and then once you've worked that out, you need to update the cash book to make it correct. Okay, for some of you, it's a revision exercise. If I've provided you with this, then what you need to do is check your answers off. If you're doing it as a class exercise, obviously save it and email it to me, and I'll give you some feedback. Thank you very much for listening. Hope you understand it, and if you don't, ask me any questions you need. Bye-bye.